Hans, it's absolutely fascinating to me how Draghi and Yellen adapt to the sub-majors like New Zealand, or how they adapt to the emerging market challenges.
Well, it's clearly weighing on them, right? It's just a question of what their mandate is. I mean, last night we had this report out of the World Bank also urging Janet Yellen not to go through 2015. In some ways, it seems like they're very susceptible to the data, which, of course, these moves affect. But in terms of the social pressure, I mean, unless the World Bank has a much better cafeteria than the Federal Reserve, which, for the record, it does, and they serve alcohol there, there's very little reason that Janet Yellen needs to answer to an economist at the World Bank, unless I'm missing something.
What you're missing is the currency dynamic, Brendan. I think it really rolls into what we're going to see in currencies in the next 6 months.
You know, I'm curious, Hans, I know you spend a lot of time in Frankfurt. Help me understand the difference between the ECB and the Fed on this. The Fed's been having a very open conversation with Stanley Fischer and Janet Yellen about just how much they should pay attention to the rest of the world when setting rates. Does the ECB have a comparable tension?
Yes, and here, I mean, the big difference between the Fed and the ECB is that the ECB leaks, right? You get much more information about the ECB because of its diffuse nature. You have some, a 26 executive council governing board there. The big difference there is that they seem to either leak or telegraph their decisions much more than the U.S. Federal Reserve does. And in terms of, it's more of a political institution, right? I mean, the Fed is independent, right? I'm sure I'm going to get hate mail after saying this, but, like, Janet Yellen doesn't need to listen to members of Congress. It's independent. It's independent from the Congress, from the President, the World Bank, the IMF. The ECB has to play a little bit more. Just look at how they're backstopping Greece. That is not monetary policy.
Hans Nichols, Audible this morning. Greece has 25% unemployment. Iceland has 4.3% unemployment. How do you run a European system with that divergence?
Well, does Iceland still have its own currency, right? So Iceland has its own currency. That's how. You just let those countries like Iceland have their own currency.
It's outside.
So I guess that's an argument for bringing back.
All of these different countries, there's massive labor divergence. I just don't get it. Hans Nichols, thank you so much. Really greatly appreciate it.